Today is Thursday, June 18th, 2026. Tomorrow is a holiday, Juneteenth in the United States, so I'm recording this a little bit earlier. Stocks have hit records in a rally powered by risk assets such as semiconductors and biotech, but overall the rally is quite broad. The Japanese yen hit a 36-year low, and at the same time Japanese and European stock markets hit an all-time high. The dollar strength that is weighing on precious metals is showing up in gold and silver, and I think they have entered a bear market. As did crude oil. I believe it also has entered the bear market, and I think it should be shorted at this point. All this and more in today's edition of MasterChartsTrading.com market recap for Thursday, June 18th, 2026. As always, please like, share, and comment on this video. Even put a thumbs up in the video comment section. This is what keeps this channel going and helps promote this channel. Thank you again for all the likes and shares. If you're a subscriber, stay tuned. We'll be covering some of the ETFs, some of the large cap stocks, and some of the speculative securities in the members only video. Okay, so let's look at first S&P 500. We're trading this week. We actually gapped up between June 12th and June 15th. So June 12th was last Friday, June 15th was this Friday. We gapped up, but by the time the week ended, we actually closed that gap. So we can look at this same situation on a 4-hour chart and visualize it clearly. So there's this gap between June 12th and June 15th. Well, actually June 14th because it opened on Friday evening. Sunday night. So we came kind of close to the all-time highs, but we sold off and closed off this gap. Now you can see that we touched this blue support resistance line, so it makes sense. This is a support, very good support on a 4-hour chart. This is a 4-hour chart again. We touched the support and then rallied off of it. So chances of us making new records are actually quite high. I would be thinking about new records being quite possible in the next few days. High yield bonds, junk debt, also hit an all-time high on 15th. So we can look at it on the weekly chart. And there it is. There's the weekly all-time high for high yield bonds. High yield bonds and stocks correlate highly. They're doing the same thing, more or less. You can see that there's a correlation coefficient down below here, and it's doing pretty much the same thing as S&P 500. It spends most of its time in the positive territory. So when high yield bonds hit an all-time high, I think it's a good thing together with stocks. That means that we're seeing a confirmation from high yield bonds, which is almost like a bond equivalent of a stocks. Dow Jones also hit an all-time high. There's a record high for Dow Jones before pulling back, but I think the important thing is to look at the highs. Small caps also hit a record, so this is showing broad participation. Small caps are obviously not a very big part of the market. I think it's only like 20% of the entire stock market capitalization of the United States, for example, is small caps. So they are definitely a smaller part of the equation, but nevertheless they are hitting records in a broad rally. This broad rally is indeed powered by other riskier sectors and industry groups. So for example, here's one of those, and that's XBI, Biotech. So Biotech hit it's not an all-time high, but it's a multi-year high. We haven't seen this since 2021. So definitely a good-looking chart. IBB, or another biotechnology sector fund, also is approaching record. So overall, this is clearly helping the stock market. As far as other sectors. Here are semiconductors. Semiconductors also hit an all-time high. So this rally has been going really strong. You can see what we have sent several alerts back in May of 2025. You can find out more about this by going to the link in the description to MasterChartsTrading.com. And this has been a tremendous, just a gigantic win, 177%. So it went from $230 to about $650. How about that? So very, very nice run. Again, if you opened, congratulations, and I would continue keeping the semiconductors position open. Finally, equal weight ETF, ticker symbol RSP, also hit a record today. So which is showing that equal weight ETF of S&P 500 is hitting an all-time high, meaning that the participation is indeed broad in this rally. Switching now to Forex universe, we're looking currency at currently at euro versus US dollar. So up until not very long ago, up until May of this year, euro was ascendant. Euro was in an uptrend. So euro is on top, US dollar on the bottom. Euro was winning this battle, but then we changed the direction, and now actually it's the other way around. US dollar is winning this battle, and clearly it's doing quite well, because you can see that the dollar, this currency pair, is moving in favor of US dollar. Dollar is on the bottom. And notice that we actually hit a multi-month low. And I think if this low from March of 2026 of this year does not hold, I think we'll collapse to 52-week lows. I'm fairly certain of that. Additionally, US dollar versus Japanese yen hit a 36-year high, so by extension it would be a 36-year low for the yen. So notice this is a price that just exceeded this previous high from July 2024. We have to go back way far to 1990 to see the similar prices, but actually it's even more than that. I think it goes back to like 1987. I think it exceeded that. So we're looking at like 36 or maybe even 38-year low for the yen. Remember that this is a USD on top, Japanese yen on the bottom. So in this case, US dollar is pulling this currency pair up. If you want to see Japanese yen actual futures, we can see that on a futures chart. But unfortunately, this futures chart doesn't go far, doesn't go back far enough. So you can see we're at multi-year lows. In any case, yes, US dollar versus Japanese yen. US dollar is now at over 36-year highs versus the yen. By extension, the dollar currency index, which is composed of the euro, Japanese yen, British pound, and some of the other currencies, is also moving higher. In fact, it just hit, I believe this could be, this is a 52-week high. Oh yeah, this is a 52-week high. We just hit a 52-week high. So when the dollar hits the 52-week highs, then by extension, when we are looking at things like gold, XAU divided by USD, we're seeing dollar, take control of the action and pull this currency pair lower. So XAU divided by USD, so gold divided by US dollar. Dollar is ascendant, dollar is moving higher. Gold is descending, the gold is moving lower. In fact, on this date, the June 10th, so last week, I believe we have entered a bear market for gold. Also, silver, same thing, but actually a little bit earlier, we entered bear market for silver on 5th of June. So We're seeing gold and silver enter bear market. I would consider selling it short at this point, especially if dollar continues appreciating. Finally, I wanted to wrap up with crude oil, and I am delighted, absolutely delighted to see this chart. The crude oil has been already behaving in such a manner where I would not want to buy it ever since about mid-May, because it's been dropping on good news and it's been dropping on bad news. And so when that happens, that usually is not a good sign for a security. So finally, right there on the 16th of June of this week, basically, we are seeing a close below this red support resistance line, which implies a bear market for a Forex-like security, such as crude oil. So find out more about it by going to MasterChartsTrading.com, but I would consider selling oil short at this point if you have such an opportunity. That's it for this week's recap. Head over to MasterChartsTrading.com, click on sign up for one of the products. So again, the trading indicators, these lines in the chart, you can trade pretty much anything under the sun. Here's, for example, S&P 500 on 10-second chart. Yes, you can trade it on 10-second chart. For example, you would have shorted it right there, where there's a close below the red line. You can also trade, pretty much any ETFs or any stocks on any other time frame. So, for example, here are the small caps, IWM, with an alert back in August 2025, and I would still be open at this time. I would not have closed this position yet. So, my indicators, these green, blue, red, and yellow lines, are available for TradingView.com, and they can be used to trade on very short time frames. For example, even as 10 seconds or 5 minutes. We can do 5-minute chart, for example. You can clearly see where the entry would be right there, on close above the blue line. So that could be done, but also even more effective is trading on multi-day swing kind of patterns, or even on multi-week kind of patterns. You can also trade it on weekly charts. So just each candlestick would be a week's worth of activity, and you simply only buy on Fridays. So for example, this chart you would have bought right there on a Friday, May 12th, 2025, and this is Semiconductors, and you would have been by now, if you opened and kept it closed, and I would have kept it closed, kept it open rather, you're up 180%. So keep that in mind. Yes, you can get such huge results with my indicators. Newsletters, I send out daily alerts and weekly members only videos. Today I will send out alert or the videos about these various securities, some of the large ETFs, large cap stocks, as well as some of the speculative securities. And the best deal is to get both trading indicators and newsletters, and that is $49.95 per month equivalent if you buy a yearly subscription, or $59.95 per month if you buy a monthly subscription. All of my subscriptions come with free 7-day trial. You have a chance to cancel if you don't like it, and of course many people do not cancel because it is very useful. That's it for this week's recap. Thank you for watching. Have another great trading week. Bye bye.